Good morning. We're getting started a little early today. We have 8:30 news again, like yesterday, a lot of news, and we want to check out the pre-market. It's been moving really well and seeing if we can get some trades in prior to the time frame closer to the news window. I mean, prior to, because the news is driving the market to be untradeable for a while. I mean, because of the rapid movement. And we can see here that we're caught into hold on. Let's go back over here. Sorry, I had the micro on over there. So you can see we've been pushing the daily high fib. Got to push back, and then we got to trade back off of the 200, which we're in right now. Today is the 25th of January, 2024. It is Friday. That's our day for caution. The markets can stall, be chop, or very little movement. We don't want to give back any hard-earned profits from the prior part of the week. Let's see. What I like to do in the pre-market is get in, get out, and then shut down until a later time frame, possibly after the 8:30 window, which is, will take 5 or 10 minutes or more sometimes. This is moving rather slowly right now. But we're back at a double top. As you can see. Okay. We got filled. We have $100 profit. We're going to sit back and see if we can get another opportunity. and we're trading the NQ, the mini right now. But if you're trading the micro, that's absolutely fine. And is even preferred if you're a newer trader or you're just starting or your capital doesn't support the risk reward relationship on the full into NQ contract. I made a nice move up. Again, we're pushing into the fib high. A lot of times we like to take the counter trend trade down on the trio, but we're going to only trade in the direction of the market movement, which is right now above the 200. It's above the 89 EMAs. And you can see it triggered here, and we got a spiral a couple of trades later, a couple of bars later, excuse me. And it worked out nicely. It's 7 a.m., the top of the hour, and you can get a little bit of price movement, and it can be directional. In other words, against the current trend or just continue to push. We got a sticks, but I want to wait for a pullback. If we're pushing the fib high, we're high. Doesn't mean that it won't trigger and continue to go. It's just kind of a very slow move right now into the daily high fib. We're going to be patient and just wait. That moved. You can see the fib high right here up under the price movement as it goes above it and below it. Just one single bar. That was quite a move. Quite a move. And it's still pushing. We're going to patiently wait here. This stick's worked out quite nicely, but we're in a profit. We're pushing the high, which gives it a lot of resistance. And we want to take conservative trades. We want to pull back. We had some decent trending this early morning hour. You would have had a significant number of potential profitable trades, depending where you are in the world. Okay, now we're getting a potential pullback or just a sticks. We shall see. This might continue to push up. Even if we do take a sticks, we normally like to take the first one and not take any additional sticks, especially if it's moved this far in the trend. I mean, this is a big move, and markets like to pull back. We're sitting here at 708. And it's like molasses, just dripping slowly. I'm getting honey out of a jar. You get a and it's not a hard and fast rule, but you get a lot of slow movement when you have a big news window in front of the market. And as I said, not always, but many times. And that was one reason I wanted to get started early this morning, among others, was to pre-run the 8:30 window, because even as it gets closer and closer to the windows, many times you just get a lot of chop. And at 7:30, many times we get some. Then it can be short-lived, but we get some market action many days. So again, what do we focus on? We like to look around the hourly mark and around the half-hourly mark. We know those periods are when the markets are generally moved, and it can be in the opposite direction of the trend. So you can't be too cautious. You must be very cautious, because if you try to join a trend many times, and it doesn't have to necessarily be exactly on the hourly or the half hourly. It can be a few minutes before, a few minutes after. But it tends to happen, at least on some level. Push it up. We're going to still hang tight here. That trade would have won also. But again, do I feel bad about it? Absolutely not. I have a rule set, I follow it, and it works often enough that I don't go against it. Oops, sorry. This trend has become quite long, but it tends to be slow this time of morning, but there does seem to be some nice trends. We're going to explore this more in the future. There are people that want to trade but have a job. Maybe they have to be work at 9. And if we can get in and be in solid by 7, give them an opportunity to catch a trade or two, to make a few dollars, $100, a couple $100. What you have to realize, people do, of course, but maybe they don't internalize it, is that $100 a day is an extra $2,100 a month minus commissions, and $200 is $4,200. That's huge. I mean, even minus commissions, you're not that far from an extra $50,000 per year. That can make a tremendous difference in a person's standard of living, family's standard of living, especially in times like these when, we've got crazy inflation, and it seems like no matter where you go, it costs more money. I mean, from everything. Um, car insurance, groceries, fuel. But this could resolve many people's problems and still allow them to work their full-time job, which they need. And maybe even, just maybe, if you're diligent, create a very good trading plan and be consistent and stick by your rules. We got another sticks. It's so far up that I'm not taking this. Doesn't mean that it won't just continue to slog up, and it's doing it. And honestly, it's very consistent in that we got 3 tails, but not a lot of additional movement outside the upward trend. I would like to see a nice pullback. Now, you have to be tolerant and adaptable to this type of price action. But I'm okay. I'm just sit here and talk to you guys, give you pointers. And if you have questions with the way it's moving, I got time to answer. Now, if it starts moving in a different manner, I won't answer them. I'll have to wait for Frank to get back with you and answer. $7.20, 10 minutes to the half an hour time frame window. Just keeps on slogging up there. That is a tremendous push into the fib, the high fib. Had I taken this one, or even this one, and I would not, I mean, I would probably shut down until after the 8:30 news. Why? When you have a nice booked profit, don't give it back. Bank it and then wait for the market reset after the news window. Got another sticks forming. And normally when you start seeing the sticks closer together, we're getting some degradation in the trend. Now, another thing you get when you get a huge move up like this, and this is a nice move up, you can get a significant pullback or even a degradation in the ability to go back in and create a continuation of the trend. Okay, we're getting some pullback. We're 7 minutes before the half hour. This month has gone by. It's been challenging, but we've been hacking out some nice profits. We only had one day where we're going to call it a wash because it was up and it was down and we ended up, but $5, and commissions would take that away. So we'll call it a wash. But we get those. And honestly, we're really consistent. Have been really consistent, but some days that's just the way it goes. Don't go back in, try to revenge trade. Put that in your plan if you like, which I do. That some days you just have to call it quits. If the market's not cooperating, or maybe you're not at your peak, be able to understand that. Verbalize it to yourself. Things aren't working out. Maybe I'm not quick enough today, or taking some questionable trades. It's very slow, but honestly, if you've seen some of the price action lately, it's a pleasant relief from that. Now we got some down movement. We got a trio down. We should see a push down. What I would like to see before we go back in is for the market to come down here on the 200. It's on the 89, but if it holds there, now we got a trio down here, down, and we just got an indication of some strength down. I normally take these when it's even not nearly that much push into the fib high as a counter trend. But when it's moving this slow, it could reverse itself really quickly so there's not a lot of volume pushing this thing around. It's just tracking up. So we're going to go, as I said earlier, with all trades in the direction of the trend. No counter trend. When I say we, I mean me. I can't tell you how to trade, where to trade. It's not legal for me to do so. I'm not a CTA, and I call what I see. But you also have to be able to learn to see things yourself. And some of you might have taken additional trades here and would have done extremely well. Yeah, you can see it's not wanting to go down. I'm not going to personally take this back into this high spot. Is have the potential to keep tracking up? Absolutely. We're 1 minute from the 730. Let's see what happens there. And what I would personally like to get out of this is one more trade. But what I also personally don't want to do is to give back this trade. But you can see why I did not want to take that counter trend. It's just moving so slowly. There's not a lot of volume pushing this around. And that's not ideal. And that setup met all the metrics that I've used in the past for taking a counter trend trade. It just wasn't enough volume movement. Now we got a sticks again. Which was created by upward movement off the 89, which means it's super caution. Now, if it breaks the 89, yeah, that might work out. Again, it's Friday, end of the week. We would like to exercise a lot of caution today. Same with Mondays. Mondays can be a coin flip. But generally, if we're patient and we wait, we can get a breakout where the market is, starts to move, especially with the NQ. I mean, the NQ is considered a monster, and it is. But it also has a lot of liquidity, a lot of opportunity. So we don't know for sure, but this might trigger back long. But the way it's moving, and that's 732, I would not get back into this at this point. Not at all. One of the questions Sam had, so now we got, let me digress here. We got a trio, which is one of our favorite signals we developed up. You can see we got a trio down. And, this may work out. I'm not taking it. I'm not giving back. And there we go. It's just slogging higher, higher, higher. But I was asked by Sam about the ATM. How am I moving? So I got this is me, and everyone has to set their risk reward ATM strategy themselves. I got a 35 stop with a 20 profit and a break even of 21. And everyone asks, well, why is it break even 21 if the profit's 20? Because it has to go through 20 to trigger and fill. And then I got a 39.11, which means it's actually at 39, and I'm going to change that. But at 39, it actually will chase the market as it moves in our direction. It moves the stop up one tick at a time. So it mitigates that potential risk as it moves in our direction. And that far behind, it normally will cover, retrace. Sometimes not, but we like it. we like it to at least, so if it goes 10 ticks and we got a 35, that takes us to a risk of 25, which is much closer to a 1-to-1. It's not, of course, but a 1-to-1 profit to risk, target to stop. That's another winner. This is just slogging up, slogging up. If you took that, congratulations, but I generally stick by my rules. And honestly, generally, it just doesn't create. I mean, this is a remarkably big trend, and I'm comfortable with that. If I'm creating consistent profits, and consistency doesn't mean you don't have losses. I mean, you have to be foolish to think you'll never have a loss. Um, it's a beautiful trend. Now we got the 8 o'clock hour coming up. And what we want to do is see if we can get a change in momentum, or I want a significant pullback. This was a good pullback. It's just so high that that's one of my rules. And if it's not one of yours and you've tested it and you like it, then that is your rule. I mean, the market was giving profits this morning. You can see we got one, I mean, off the trigger, off the trail, 1, 2, 3. This would have been a loser. And I hope you see what I mean. So you would have given some of your profit back. Now, again, this would have chased the market up. And mitigated the part of the loss. And here is another winner. This is, I mean, we like the sticks, but the sticks is not nearly as reliable probability wise as the retrend. Now, if you pick sticks retrend, it doesn't matter which one occurs. It sees both. It would trigger here, and it would trigger here on this one, the exact same settings. Frank has programmed that to trigger on both. Got another sticks. And yeah, it certainly is tempting, but not for me. How I like to mentally approach the market is, let's say I'm trading one contract, which I am right now, mainly for several reasons. One is I'm testing something new, and I've back tested so many different times and different time frames. But it's a new strategy, which is a time frame strategy. Same exact indicators approach. Boy, this thing's really wanting to push. But the way you increase to me, the profitability, and I'm certainly not the only one, is as you add to your account size, that you have a certain allocation required, for an additional account size where you can add a contract. And if you're trading micros, it's much easier. Now, when you get, let's say you get where you're trading 10 micros, it's more efficient to switch to the 10 micros, and then you want to switch to the mini contract because it's more efficient as far as the commission is higher percentage wise to trade the micros. But it allows you to really efficiently leverage a small account to a large account. And that's something Frank and I are working on, is trading us, leveraging and mastering the approach of a small account to become a bigger account, and then a bigger account, and then a large account, without being overly aggressive with leverage, because that will potentially kill you. I mean, it almost always comes back to haunt you if you're over leveraged. Number one, your mental approach is probably not in, the best place to be. You have some fear. Oh, I got so much leverage, I might make a big profit, but then I might lose half my account. And we don't do that. If you do that, unless you're unbelievably lucky, you will. If you do it long enough, you will lose. It's like the casinos; they have it leveraged to where long term, if you play long enough, they win, because you're defying the laws of probability when you win. We got another sticks, and it's moving painfully slow. With 742. So we're 18 minutes or so, probably closer to 17 from the top of the hour. Now, if you're sitting here, you're probably aggravated about, and maybe you did take those trades. And I applaud that, but let me tell you, if you exceed the first sticks, which we'll call wicks, you will get bitten at some point, hard. In this case, yeah, it worked out. You lost here, but you didn't lose much if you're chasing it with the tracking 1-to-1, the trend up or down. I mean, so let's say you got in, you would have been filled here. You get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So you took 14 off of the 35. So you reduced the risk by 14 ticks. So you're right, yeah, you lost, and you would have lost $100, but it would have been pretty much back to a break even, and not 35 ticks, which was much more painful, because then you're in the hole versus break even, and break even is, you don't know the feel. This is pretty much dead right here. Okay. there's a guy, and I've trained under a lot of people, but his name was Mark Douglas. He's deceased now. And he wrote Trading in the Zone. And I recommend that. And the book's still around. I think you can probably buy it on Amazon, and you can buy it in used bookstores online, because that's, traders are a fairly rare bunch. But he basically instills you test and know your probability of your system, and you work with the probabilities. For instance, if it's like a 90% probability, and this particular system runs that, especially with the trend. If you're going counter trade against the trends, like this one down, if you took this, and I've taken these a lot, but it was, with the way the market was moving, and even though it had two triggers down, it had a spiral and it had a trio. It's laying on the moving average, and it's moving extremely slowly. Now, I wouldn't take that. So if you're going with the trend, you can maintain the efficiency of your system. But here, and again, this is so painfully slow. We're 14 minutes away from the top of the hour again. I'm not taking it. I do want to get another trade if I can. If I can't, fine. And I'm not in a hurry, because we got the rest of the day, because we got up early when there's not nearly as many, trust me, as participants up at this hour. They don't want to get up. I didn't want to get up, but I did. Since it's moving slowly and we got some time, I'm going to go again, because we got a couple of new participants in here. With our system, with our strategy, Frank programmed this to be able to anticipate trades. So, for instance, if the market had been moving differently, you could have selected spiral up and spiral down. And when the market decided which way it was going, that's the one that would be the direction that would be triggered, and the other one would go away. In other words, clean slate. Or we could just hit, let's say we decided, hey, this is going neither. We just hit clear and the slate is clean. But it will automatically do that if the market goes in the direction of either. And also, after the market triggers, let's say let's say it did trigger down, or let's say since it's going up, it did trigger. This triggered up. We could just say sticks retrace, and we would watch closely, because if it triggered here within a decent range, we're okay. We're going to take that probability. But if it triggered here, we don't want it. So after it passed a certain point, we would go clear, or if you just double click it. So if we hit here and we don't want it, we can just click again or hit clear. And it's imperative that you practice this first. I would say practice it on playback. 4-to-1. What does that mean? 4 times offline versus online. And then I suggest, and we suggest, and Frank's with me with this, we like to see you go to simulated and trade. Now we got to see that sticks did not trigger. It did not fire. And if you tried to pre-run it, you likely getting stopped out. We're 10 minutes off the top of the hour. Let's just follow and see what we get. So for you new guys, and I say guys with no gender, selection, guys and gals, and that's the way guys is usually used in at least the American version of English. Two contracts would make you the $200, and as we talked about, that's approximately it's $4,200 gross, but you got commissions, but you're close to $4,000 a month, unless you're making $500,000. I mean, that's significant to people. That could be, your kid's college. It could be many things. So this one, finally, that one would have worked. You taken a trio down, which is what we like up in this area. Um, okay. This could very well trigger long, and that's your call predicated on your plan, your trading plan. I'm not taking this right now. I'm very selective, especially in this market. But it's actually much more treacherous to take any of these in the primary market because you have a lot of participants, a lot of big traders. You got commercial traders, you got the banks, you got the hedge funds, you got the commercial traders could be the corporations like the airlines hedging their bets, wanting to maintain a stable fuel supply at a relatively stable price. You have all these participants around the world, especially on the NQ. It's just such a traded instrument. Now, what we're doing now is, we have the London session, and it's big. And they'll go to 11 o'clock when they square their positions, which can be a really volatile time frame also, meaning not unidirectional, but multi-directional. That's a very nice trade. But would you be willing to take it when this happened here? Well, if you did, a lot of times what I'll do is I'll select rider down, which is the indicative of acceleration in the direction of the trend. So if we selected rider down, it wouldn't have triggered to right there, but it would have been a profitable trade. If we took the trio, we could have gotten this because this is sitting on the 89 here, and it's also sitting on the 89 there. There was just enough momentum to push it down, but it didn't happen. We got 6 minutes to the 8 o'clock window, and we'll take a look at that. That's a good trade down. But what did we say? Or what did I say? My plan was not to take these counter trends. Giving back profit here would have been painful. Having a winner trader here would have been rewarding. But one loser would have wiped out more than one winner, depending on where it triggered the loss. In other words, where the movement went. If you, let's say you want to adjust your ATM to on that 35 stop, if you wanted to chase it, say at 34, which means once it moved one tick in your direction, up or down, it's going to chase that. You have to get on simulated or playback and test it before you incorporate that into your plan. It's moving so slow that it's just giving me time to mostly talk to the people that aren't tenured traders. You haven't been trading for several years. Again, I love what I see so far, and I will keep testing. And I tested this for quite a while, this time frame offline, and I will probably alter the plan somewhat when we get a trend this tracking like this, because I've noticed I always take, as I said, the first sticks wick, and occasionally the second, but down in here, I'm avoiding these like the plague, as they say. But we might have some other considerations, and we'll have some rules around it. And here's the thought process for you. So we're trading one contract, get $100, and let's say, and we want $200, and we decided to take the second wick sticks if it meets certain criteria. So we got $100, we got $200, and maybe even 300, depending on what we decide, and test and test and test. We, instead of going for, crazy trades, which this one would have lost, this one would have lost if you tried to counter trend it, and this one again would have won, but this would have hurt you badly. Still aim for two trades, but as you make $200, you're going to meet up, after X number of days, if you're consistent, you're going to have the capital to add a contract. And that will take a while. But when you add two, instead of having $200, now you're making $400. And when you make $400, that's close to $8,000. It's 8,400 minus commission. So probably not $8,000 a month, but even close to $8,000 a month. I mean, you're looking at over $90,000 a year, and that's changes the game for most people. And I know I've been around trading a long time, and I've seen people trading 50 full contracts. And I know some remarkably good traders, and I've bought a lot of software, too much. And I'm going to be blunt, most of it is absolute junk, but I've seen some good ones. And they're unbelievably efficient at trading live. which you really can't do, but they show you in retrospect their live trades, so you can't take the trades. It would be the end of the day, because they don't run foul to the SEC, and they still only, after years, they still only trade three. Like if it's an incredible market, they might go to four. And if you ask them why, and I've asked them, they're like, that's what I feel comfortable with. And even though my win rate's the same if I'm trading 10 contracts or more, psychologically, I can't deal with it. So everyone has to have their own profile as far as how large a trade can they deal with. And you can become acclimated, but it takes some psychological work to trading, that many contracts. Because that, you number one, you got to make sure your account size will accommodate the risk reward relationship. Okay, we're trying to go up here. We're 2 minutes past the hour. I'm going to put a spiral up, and it just triggered, probably way too early. Um, we would like to see a rider trigger back in here, up rider. Not that we're going to take the trade, but it gives us some additional confidence that we'll go up and hit our target. And this is slow, and this could stop us out. This is a totally legitimate trade. Okay. We're right up there, and the temptation is, okay, I'm done. And this could have been just as easily $1,000 profit for the day, based on, you're allocating additional profit for additional contracts. So two things. We're 26 minutes away from the news window. And generally things, as it approaches the window, get sloppy or doesn't move. And it's Friday. And I got $200 in the bank minus some commission, but not a lot. I mean, I'm trading one contract. So, and I own, most of but the ones that are new, like Sam asked a question earlier also, why is it different commissions? Well, NinjaTrader has a structure that if you buy the platform, which is around $1,200, maybe $1,400, but it does include some extra indicators that you don't get if you're leasing it. So you can lease it and you get another structure for cost. And if you just use it, basically you got a different cost, and it's more and can add up. They charge you more per trade. You have to make your own assessment of the difference in the cost. But if you own the system, it's much less. So we got a sticks, and am I going to take it? No. Will it work? Maybe. I don't know. But again, I got 2 winners, and it hit the winner, but barely, and then had a good pullback. Would it stop out? Maybe not. But the moving average, excuse me, the ATM was chasing the price action, and it was starting to tighten up, which is what we wanted. So again, that sticks is moving in the direction, and it was the first sticks. But again, we're moving towards the 8:30 window, and we're going to stop this right here and come back later after the news, which is probably we'll come back at 8:30, but it's probably going to be 8:35, 8:40, or maybe even later, because we had a big news window yesterday, and it ran like crazy for quite a while, and you could not trade it. You'd never get filled. When you got multiple bars with the same time stamp, and we got a +1, so limit +1, you're not getting filled. So take care.